All right, everyone. Let's take a look at the euro and the Chairman Bernanke's speech tomorrow, and we're going to create a couple of different options here. You may not be able to see the chart very well, but it's over here, and it's just kind of moving up and staying just below this level, which is 37.50. Now we don't know what's going to happen on the overnight, and a lot can happen on the overnight. So you have to remember that a lot can happen between 5, it's almost 6 o'clock in the afternoon Eastern time and 1 o'clock in the afternoon tomorrow. So keep that in mind. That there's a lot of time-based risk here. Okay, so let's just sort of zoom in, and what we're going to do is create an option on the top and an option on the bottom. Now, with this particular report, we can expect the market to move the British pound about 50 pips, which means the euro is probably going to be about 25 pips. Okay, so 50 pips would be the BP, and 25 pips would be the euro. Okay, so we're going to use the 25 pip number. And we're going to have to use the current price for that because we have no idea what the market's going to be, where the market's going to be come tomorrow afternoon. So as we set the price box, we click on price box here, we move over. Now you can see that over here is the time. So we'll set it to 1 o'clock roughly. Whoops, we don't want to go up too high. And then we'll just lock it in. Now remember, even if these numbers aren't exactly where you want it, you can change them over here when the window pops up. So we see that the euro is trading at 37.47. 37.47 plus 25 pips is 37.72. So we need to change the minimum level to 37.72. Remember, the minimum level is going to be the bottom here. So we'll just put this down. 37.72. And we'll put in $50. Now remember, this is a hit box. In other words, we want price to come up and hit this level. Now remember, the mid price has to break the boundary of the box. It has to get somewhere inside of this box, the mid price between the bid and the offer. So you have to remember, if the spread is very wide, let's say there's a 20 pip spread, and the market comes inside of here 9 pips, it's inside of there by 9 pips, you're not going to get paid out. Okay, it's got to come more than midway. You have to remember that. It's very important. So let's check the time. 1:15. We'll go down to 1 o'clock exactly, and that's 4 o'clock. We'll come back. We'll back it off here to exactly 4 o'clock, and we can see here that on our $50, the broker is willing to pay out $116.22. So we'll go ahead and write this down. We've got 38.19. down to 37.72, a $50 option pays out $116.22. Okay, so remember, that's if the market is going to come up and hit it. Okay, we've got our times right, we've got everything right. Then you just go ahead and hit submit, and the box will be created. And you can see, whoops, let me position this a little bit better. Hopefully you can see, here's the current price right here in that area. Here's our box. So price needs to somehow get in there. So that means we can't see a big deviation down, because even if Bernanke says something, if it gets all the way down here, it may not get up there. Okay, so we need price to stay basically even if all we had was the one box. What we're going to do is create another box down here. Now remember, we need 25 pips from the current price. And remember, there's risk here because there's time. There's a lot of time. Price can do a lot of things. It could be way up here. It could be way down here. We don't know. So keep this in mind. This is just a generic strategy. If you're going to put one of these positions on for real, you've got to consider market conditions and also the